Hi, this is Zak Mir with the best of the Bulletin Board Heroes year-to-date 2023, and starting off with Artemis Resources, which gave us our classic unfilled gap to the upside back in June. That was around the 0.7 pence level. There was a sideways shuffle along a rising 50-day line, and then we've basically been up, apart from that bull trap in July, been up all the way for this situation. Still looking for 2.6 pence perhaps by the end of next month, while we remain above resistance on the way down around 1.4 pence. So hopefully Artemis will have a fresh leg up over the near term. Moving on to one of the best turnaround situations of this year. It started in August, unfilled gap to the upside after a bear trap. That narrow new low back at the beginning of August, and then we gapped up through the 50-day line around 0.09 pence. The shares peaking out near 0.28. These companies got their money, had a raise as well. So the game now really is to see how far back the shares will retrace. Hopefully no lower than the 50-day line, currently at 1.13, and that was also, that level also resistance on the way down. But the bear trap gap reversal, the big setup there, along with the bullish divergence that has been placed or was in place up to the beginning of August as well. So a bit bullish divergence, the bear trap and the gap, the three big turnaround signals that you get with the biggest moving situation, biggest rising situations. On to chill brands, which obviously at the moment is a little bit on the back foot due to vaping concerns perhaps, but the start of the year saw the great turnaround for the shares, bullish divergence going into January, and then the sideways shuffle along the 50-day moving average, and then the vertical move. That was from the 2 pence level, and we had a move straight up from 2 pence up to the 14 pence area after a gap in May, which was not filled then until the June decline for the shares. Great setup there, breaking the 50 and 200-day moving averages back in February. Moving along to another stock which had a transformational year earlier in the year. Here it was another sideways shuffle, i.e. extended support at and above a rising 50-day moving average near the lows. So that happened for a long time there, between mid-January and mid-March, before the move finally came, with those strong candles as well, opening at the low, closing at the high. We had 2 or 3 of those, and that pushed the shares up from around 50 pence to up to £1.80 at the peak, after a bit of a wobble there at the latter part of March. So great setup there, but the only thing there was really that we didn't have the unfilled gap to the upside that you normally see in those situations. Good RSI setup as well, with the uptrend line there going into the push higher, the vertical move that we had back in March. On to Empire Metals, which I've given lots of coverage to over the recent past, but here we had the classic turnaround here. In fact, we had two. We had the full storm back in May, with the gap through the 50-day moving average, but the only problem there was that the line then was actually falling, so it wasn't quite the signal that we were looking for. In fact, the one in February was maybe a better one. But let's say third or fourth time lucky, the shares delivered their move at the beginning of July with a bear trap gap reversal. So new low there for the end of June, and then gapping up through the 50-day moving average. Bullish divergence as well, so a line there from back at the end of May, and then going into the early part of July. So that break of the 50-day line around the 1.9 pence level, giving us a rally up to as high as 5.5 pence before the retracement started. Hopefully we'll find support at and above the 4 pence area. Another stock which has had quite a turnaround, and that came in July, was from Imperial. Here we had that bear trap to a temporary new low below the May support there around 0.9 pence, and then pushing through the 50-day moving average. Good consolidation above that rising 50-day line, and that then with the entry area around the 1.3, 1.4 area, we had a peak there around 2.6, and we've also got a bull flag now looking for fresh leg to the upside. Breaking 2.8 pence could give us up to the 4.4 pence level as soon as the end of next month. So looking pretty chirpy there on East Imperial. A stock which I hadn't really given much thought or look to over the past was, or is, Eneraqua, but here we had the overshoot gap to the downside, hammer candle there, bullish divergence from way back in May going into that hammer candle, and then the gap close buy signal that we had at the beginning of September. Unfilled gap to the upside for last week on the 11th, and we're pushing higher. So it's almost like a combination of signals there, but the unfilled gap to the upside after the gap close really strong, and that suggests to us that £1.60 could be on its way by the end of next month or even sooner. In fact, that the shares below 100 pence were really in overshoot territory on the downside. Glantus is a good educational setup in the sense that we had the break of the 50-day moving average at the beginning of May, and then the sideways move, that telltale sideways move with those stable prices there above the 50-day line, and then obviously there was the deal announced at the beginning of July, and it was up and away after that. But always worth looking at those extended moves near the lows at and above the 50-day moving average. A very common occurrence to see that before a big move to the upside. hVIVO, a classic in the sense that the shares gapped up at the start of the year through the 50-day line and broke the gap up day on the 4th of January. Never looked back until the shares peaked out near 23 pence in early February. The current situation actually is that we've got another gap, which is encouraging after the gap higher through the 50-day line that we had back in July. So almost a continuation signal, or actually a continuation signal above the recent resistance around 18.75 pence, looking for the shares to hit the top of that rising trend channel at 26 pence as soon as the end of next month. A nice RSI 50 bounce area as well for the end of August. On to Marula, which was one of the stars of the Aquis market, and here we've got another one of those situations with the sideways move at and above the 50-day moving average. That particular antic started as long ago as September last year, and you can see that the shares managed to shuffle along, as I call it, above that 50-day moving average for months before the big move higher, and that very strong candle opening at the low, closing at the high on the 28th of December, really the starting gun for the move, which took the shares from around the 2.5 pence level up to as high as nearly 15 pence by the beginning of April. So a classic situation there, and it's certainly, as I said, very much worth following shares which are trading above their 50-day line near their lows. On to Ondo, which again has been a fundamental and a technical winner. Here you can see that we had the classic setup, and that classic setup was a gap down back in April, and then a gap higher, unfilled gap to the upside for the end of that month. There was also bullish divergence with the lower low, but the higher RSI that we had going into that spike day that we had on the 20th of April, and basically the shares had a clear run from the end of April up to the break of the 50-day line back at the beginning of this month. I want to see the shares back above that 50-day line around 30 pence to resume what has been a stellar move from back under the the 6-7 pence area, which is pretty impressive. Optibiotix, again, a resurgent situation, and here it was a bear trap that got the rally started. In fact, it was a gap close buy signal, so we gapped down just ahead of the lows there at the end of June, and the gap close day back on the 30th of June around the 7.5 pence level. We came back below the 50-day line, but that gap close really was the big signal, and took the shares up to as high as 40 pence plus by the end of July. Let's see, get the shares back above the 50-day line at 25 pence to resume the uptrend there. Plexus, a great situation, and rather difficult to not see this one. We had the unfilled gap to the upside at the end of August, and broke the gap up day on the 22nd of August, just a couple of days later on the 24th. But actually you could argue that the rally here started with the sideways shuffle above the 50-day, the rising 50-day line as long ago as February, and we basically had a decent one then above the 200-day line as well to take us up to as high as 18 pence. But those who were late to the party could have bought in at 5 or 6 pence, going for 18 pence over the course of much of the latter part of August and going into September. On to the last few versus Pantheon, which surprised the market perhaps, or probably upset the bears with the unfilled gap to the upside through resistance. We were already spotting this as a potential turnaround when basically on the 25th of August, when the RSI started to rise, and the gap higher the next day really gave the game away in terms of the shares being a buy around 17 pence at the latest, and looking for the move that we've had up towards 30 pence in the subsequent period. Nice V-shaped bull flag as well, and the breakout really in force while we're above 25 pence and that initial September peak. We're probably looking now for at least not only 30 pence, but actually for the shares to fill that gap up to 50 pence over the rest of the year. So let's see if that punchy call will work. A stock which I didn't cover at all, or haven't covered at all until today, has been RTC Group, but I thought I'd just throw this in as we had the sideways shuffle above the rising 50-day line going into July, and then the vertical unfilled gap to the upside. Even if you were late to the party, you could have got into the shares around 40 pence, and you're now near 60 pence on that situation. On to Rockfire, where I was covering the stock basically since the gap higher that the gap down that we had back in October. The break of the floor of the gap there around 0.15 was the first sign of a turnaround. And I suppose if you were late to the party, the next signal was in January with the sideways shuffle above a rising 50-day line, followed by a gap. In fact, there were gaps in January and in February for the shares, which justifies the way that the stock has basically more than doubled off the lows. And I suppose it was a decent backdrop to the latest deal that the company announced this week. Finishing off with Upland, which was just great in terms of the rally that we had over the course of the middle part of the summer. Here you can see that we had the big setup there with the sideways shuffle going into the gap higher that we had on the 24th of July. And that basically gave us the rally from around the 0.5 pence area to as high as 2.8 pence back in August. So let's see again. Another situation where we want to see how far the stock can retrace or needs to retrace before a new leg to the upside. Hopefully we'll hold above the 50-day line at 1.6 pence ahead of a further move to the upside. That's it from me today. More updates during the week.